Hey there, welcome to the Scott Welsh Strategies YouTube channel. Strangely enough, I'm Scott Welsh, and we're doing a series of long-form educational videos, one each month, coming out at the beginning of each month, for a few months now. I've got a lot of long-form ideas to share with you, and this is one of them. Today, we're going to build a trading system from scratch, and then see if we can beat the market. Now, there will be, drumroll please, a discount on this automated strategy if you make it to the end and if you're interested. And that, my friends, is high-powered marketing, right? Now, disclaimer, I'm going to talk about a lot of numbers in this video. They are hypothetical numbers. They're not real out of my real account. They're meant to educate and entertain you. I do try to be as accurate as possible, but please do not risk any money you cannot afford to lose, and the numbers are hypothetical. We're going to build a system from scratch. We're going to work from ideas to do it. And then we're going to find out, great, neat idea. Does it beat the market? Okay, we're going to check that out also. Now, before we get started, what's the point of me doing these videos? Well, I'm glad you asked. I'll tell you. I don't like index funds, and that is an understatement. I feel like the index fund industrial complex has led regular innocent people astray. I feel like they've tried to sell us something that isn't that great. In fact, it just might be terrible. It might be a terrible way to invest our money. People don't know it, and they will suffer for it. Being a passive investor can be horrifying. So what am I going to do? Sit around and complain about it? No, I'm going to try to do something about it. And that's the point of these videos. Now, do I get a little bit of money if you happen to buy my robot at a discount? Yes, of course. But I also give away everything so you can build it on your own or do it for free. Who's this for? A regular person who wants to change their financial life by using a trading system instead of passive investing. Blah. Okay, now let's get started. We're going to start from scratch, right? So you can replicate this on your own. Hopefully you will, and you'll do something fantastic. There are a few ways to do it, though, if we're going to build a trading system. One, you can buy something, okay? You can go online and buy something. Now, the problem with that is that somewhere along the line, people all over the world, and I'm looking at one particular country in particular, decided that as a side hustle, which makes me throw up in my mouth to even say those words, side hustle. Ugh. But they thought, hey, I'll just code something up and I'll take innocent people who don't know any better and I'll sell them this thing. And if I sell 1,000 of them at $150 a piece, then look at that. It's an income stream. Woohoo! That makes me very disappointed, but it's out there. And how do I know that they're not good? Because I like to buy some of them. I like to check out what's going on out there. I like to check out what people are trying to sell to regular, innocent people. And my conclusion is not good. It's not good. Haven't yet found something I've bought that will work. Except for my stuff, of course. So you could buy something, but do your due diligence. Or you could data mine something. Get a powerful computer and then just start running random anomalies. Tuesday at 2 p.m., if the sun is shining, what to do with the SPY. You'll find something, right? Do you remember that 99% accurate system when the price of butter in Bangladesh goes up, the market goes up or something like that? You can find those things. It's not great, though, because price of butter in Bangladesh doesn't have anything to do with the market, and that will eventually fail, of course. Or you could create something from scratch. That's the third way. The best way, according to this video, right? Here are the problems trying to create something on your own. If you buy a black box, meaning a trading system online that no one knows how it trades, easy to be a charlatan, easy to lie to you. I don't give you any data. I don't tell you how it trades. Just take it and buy it. I'll give you hope with fake numbers. It's out there. Sorry. I mean, it's out there. Or the problem with your system is you don't understand how it trades. Right? Even if it's not a black box, if you don't fully understand it, you will turn that thing off at the first losing streak, because even though we think we're optimistic, We are pessimistic, and we are big time pessimistic, and we will bolt as soon as it starts losing. Why? Because we don't trust. There's a problem with data mining, which clearly you've already figured out by now, right? Might not work going forward, and there's just no confidence in either one of these ways, right? If it's black box or it's data mined, it just doesn't instill confidence, right? Bangladesh butter or a charlatan online, that's not going to beat an index fund or make us money and change our lives. Building is better. So let's build it from scratch and solve all these problems. It's not a black box because we built it. No charlatans because it's us, right? Or at least it's us agreeing with the method, right? I'm going to give you a method. You can agree with it, and then we're building it together. Plus, it will be logical. Guess what? Logical things tend to work. Big surprise, I know. Why, for example, would a timeless principle stop working? Like, why would it? If it's been happening for thousands of years and it makes sense that it happens, it's going to keep happening. So let's try to ride that principle to some financial gain. So bottom line is we'll start with an idea. There's a bunch of good ideas, right? My favorite, well, that's not true. One of my favorites, right, was trend following, is trend following. Trends will always be true. Trends have been around forever, and trends will always be around. It's never going to stop until humans are replaced by not humans. What's the problem with trend following? It's nearly impossible to follow. People have said that systems that lose work because people would give up on them. I don't know if that's true, but I do know that systems that lose are very robust. You know what else I know? Systems that lose are never followed. Never. People cannot take losing if they don't trust. And trend following loses, so people don't trust. It's the way it goes, right? Do I like trend following? I love it. But it's not what we're going to talk about here today because it's not easy. Another principle is value investing. If you buy something on sale, when will that ever not work? When will ever be a bargain shopper be a bad idea? You may not want to all the time, but honestly, that's going to work forever, and Warren Buffett has kind of proven that, correct? But if you're looking at trend following and value investing, for example, value investing is way more fun. Way more fun, value investing. It's not fun to buy a new high. That's what a trend follower does. Oh, it's making a new high? Buy it. It's making a new low? Sell it. Boy, that's rough. What do we think when it's at its high? This is going to turn around. Literally almost every chart I've looked at for a decade, I've looked at, what's overbought? What's oversold? That's the first thing you do, right? Well, trend followers operate in overbought and oversold. Again, why they're super hard to follow. It works. But anyway, it's really fun, however, to buy a new low instead of sell it, right? The opposite. Value investing is super fun. You short at the high, right? The Big Short. That movie was fun because they were right. Value investing leads us to say, I'm right. We get to be right. Haha, it'd gone down too far. I called it. Oh, it went up too high. I called it. Value investing pleases us. It taps right into our brains in a part that we like. But if value investing doesn't work out, you can just say, well, something stupid happened. Right? Yes, it kept going down, but that's only because a news event came out, blah, blah, blah. Right? It's easy to not be deterred. Well, Overstock.com kept going up during the pandemic, and it was overvalued, and that's stupid. That's my stupid voice, right? It's easy to lose when you're a value investor. I was right, but I was early, right? Psychologically, value investing is very pleasing, which makes it a very sustainable way to trade. So that's what we're talking about today, okay? Value investing style is the choice. Great. What are we going to trade? All right, let's start with stocks. Everybody knows stocks, right? That's how I started. It's how you started. We all started, right? Okay, we're starting from scratch. Let's pick a stock. Good luck. Remember from Taken? Good luck. There are over 8,000, maybe 10,000 stocks to choose from. Well, how do I choose just one? I mean, how do you even get started? Tesla, Apple, right? Are you just going to pick one? I mean, you could. Man, trading one thing. What if it goes to zero? What if it's Enron? Or, I mean, what if it's AIG up and down? I mean, right? There's all sorts of problems with picking that one stock. Well, what about, okay, futures, right? All the great trend followers are in futures, right? The turtles are in futures. Let's do futures. Well, I mean, that gets us down to about 50. There's actually more. Big trend following firms go over 100 sometimes. 100 different futures contracts. Just to get started, maybe you're down to 50. You've got rollover to do. I mean, if you're just starting out in trading, what's rollover? Do you know? I mean, it's horrible if you don't know because it's so confusing. You mean I might get soybeans delivered to my door? Yikes. I'm not saying futures is bad. Not by any means. I have tested futures quite a bit. Hope to be trading futures soon in my own life. I'm just saying, for a beginner, from starting from scratch, futures pretty daunting, right? And you have different margin rates and complications with I can use this much size or I can't. And now we have mini contracts and then we have micro contracts. I mean, to get started, would you really pick futures? Specifically since you can't start with a small account either. Well, we've got problems. How about Forex, though? Is that the solution to our problems? Guess what? At least it is for this video, right? You can make very good money and you can start small, right? You can make the money of the other two, but you can start with $500,000, right? If you wanted to, right? You don't have to start with 25,000, 50,000, $1 million. So Forex is a great place and it's vastly underused by retail traders. Yes, it's gotten bigger, but holy moly, everybody runs to those passive investing stock funds, but gosh darn it. FX is a great way to trade as it's got the liquidity, right? It's bigger than all the others combined. Anyway, okay, great. We're picking Forex. Well, there are multiple Forex currency pairs. Well, which one? Well, in Forex, there are three big names. Euro dollar, pound dollar, GBP USD, and USD JPY, dollar yen. Those three have tons of volume. You could throw in Aussie dollar if you wanted to, but those three people have heard of. It gets talked about on news, and it's got a lot of volume. So we're down to Forex, and we're going to choose one of the big three, okay? Now, if I had to, or if I gave you a quiz on what's the most popular, if you had to pick one, what's one FX pair you've heard of? I mean, it's got to be euro dollar, right? We've heard of Europe. We've heard of the dollar. Euro dollar. It's got to be, right? So it's popular. It's on CNBC, right? It's on CNBC more than anything else. You can see a little ticker at the bottom. It's two countries, like I said, we understand. Let's go with that, okay? We'll start with the euro dollar. It's one of the big three, big volume. It's famous. We don't have to worry about weird, exotic things. It doesn't trade big news overnight. There's a lot of things going for it if we want to start from scratch. Remember, the other two are pound, dollar, and dollar yen. All right, let's build it. Well, if we're going to build a system, we have to have rules. It's a system. It's not just buy and hold. It's a system. Okay, can't buy and hold FX, by the way. Oh, man, that's rough. But if we're going to make rules, then how do we know they're going to last? All right, this is where it gets tricky. We have to use principles. Methods are a dime a dozen. Principles last forever. So we're going to use value. That's our principle. Okay, great. We're going to buy something on sale or sell something that's gone too far. That's too pricey. Great. We're going to use value. How do we know what fair value is, though? Right? If you're buying a car, you need to know how much it's worth to know if it's 50% off. Right? Unless you know what's fair, we don't know if it's on sale. How are we going to figure this out? Well, there's a real easy way, and it's called weekly pivot points or weekly pivots, okay? Weekly pivots are a great proxy for fair value for the week that you're currently in, and not for this week, and it's never going to be working again in previous or future weeks. No. If you're taking a trade and you want to know what fair value is right now, this week, right now, weekly pivots will give it to you. This is what something is worth. Okay? It's the high and the low and the close, high plus low plus close of last week. Take the high price, the low price, and the closing price and divide by 3. You can make them on your own. I used to do this and draw them on my chart. Now it's pretty standard. You can get pivot points on just about any platform. But if you don't, then just draw a line like I did. That level also never moves during the week. It is a level and it's static. People like to use moving averages, MA, moving averages, but moving averages move. So today, fair value is 100. Price goes down. Now fair value is 97. Price goes, and so forth. Okay? A weekly pivot, say, that's fair value, and we can trade to it, and it's always going to stay at that level. We have a fair value estimate that's not going to move, so we don't have to adjust. Plus, weekly pivots have been around forever. Pit traders 100 years ago used to use them, according to stories, right, that I believe. They've just been around. Fortunes have been made with weekly pivots, so it's not a fly-by-night thing. Furthermore, because it's fair value and because things go back to equilibrium, go back to where they're supposed to be, quote unquote, supposed to, price touches that level nearly 100% of the time. Price almost always hits the weekly pivot. Almost always. I mean, the percentages are through the roof. Go do your own research on all different instruments. But price almost always touches the weekly pivot. Why? Because things go back to fair value. They always have and they always will. So price reacts to it. It's fair value. It doesn't move. We've got a lot going for us right now. Okay. How do we know it's on sale? Well, glad you asked again. If you know what fair value is, FV is fair value, then how do you know we're getting a deal? Well, when price moves way above the weekly pivot, WP, moves way above or way below, it's on sale, it's overpriced. It's one of the two. Right? So we see a level and price has gone way above it. Something's going on here. People are getting cuckoo. It's going to revert to the mean. It's going to come back to fair value. And if we wait for a move to get extreme, if we wait for a great deal, meaning price is 50% off or price is 50% way overextended, that's not going to last. If we wait for a great move to show up, clearly it can't continue. We bet it to go back to fair value, and that's a high percentage profitable way to do business. If we're always buying stuff on sale, if it goes back to fair value, we're going to make a ton. This is, again, what Buffett did. He bought stuff on sale and then just held it, and it went back to fair value. Okay? If you only bought auction houses on sale and had a bunch of them, then you can see where we're going with this, right? When the market gets frothy, you're going to make a ton. This makes sense. Okay? But we're going to wait for it to be extreme. Well, how do we know if it's extreme? If it's moved a long way on our chart. Okay, well, what's a long way? Basically, we can define a long way as a day's work or more. Okay. What does it usually do in a day? And if it's gone a whole day's work in the wrong direction without correcting, something's up. Right? And we're just going to try to keep it simple because the simpler we keep it, the more robust it will be. That's the idea. Okay. If an instrument usually moves 100 points in a whole day, that's top to bottom. So it goes up 50, goes down 50. You add them up, it's 50 plus 50, it moves 100 points. Usually it goes up a little, goes down a little, goes up a little, goes down a little. That's why weekly pivot levels get hit every day, just about. Price goes up, price goes down, and then you measure it, and it's about 100 points. But what if it does a whole day's work, 100 points, in only one direction? It doesn't retrace. It doesn't go back to fair value. It goes one way and one way only. A whole day's worth, right? If it goes a couple points, we don't care. What if it goes a whole day and doesn't retrace? Does that make sense? Like, this is too much, right? It's moved away from equilibrium all day long. That means it's extreme. That means something emotional is going on, okay? So that is when we get interested. And here, finally, is a visual example. So many words. This is from 2020. This is the euro dollar 1 hour chart, hour one chart. This, friends, is a weekly pivot level drawn on the chart for me, although you could do the math and just draw it there. You can see that this is one-way traffic. It moved, and it didn't come down, didn't hit this level. It did eventually. Imagine that. Magic. Hit it here too. Magic. but it went a whole day's work and didn't come back at all. This is extreme. You should have come back. We decided to, well, the robot decided to get into a trade and trade it back to fair value. It took a chunk, took a win, and it went even farther down to the actual level and then reverse. Isn't that freaky? Went down to the level and then reversed. Like it had to get to fair value. Look at this. It went right up to the pivot level and then went. It's almost like magic. Okay. And as you can see, price got emotional on August 2020 and then it went back. Okay. Instead of being calm and just kind of rotating around the pivot, instead of being calm, it ran away. Okay. And it ran a whole day's worth of movement. So we set up a trade and you saw what happened. Okay. But we don't just want to look at a chart and say, well, it seems like it's gone a long way. No, we don't want to guess. We need numbers. We're trying to be analytical. So we'll use average true range, ATR. And ATR is just a typical day's movement, right? It's the average. It's the average range it usually runs for 14 days, 20 days, 100 days, whatever. That is a nice numerical way to say, oh, on average, it moves 80 points. Today, it's moved 80 points. See where we're going? That's a lot. We're going to use that ATR number to know when it's time. Okay, what have we done so far? With only one picture, too. Very bad video presentation. We chose a timeless principle, value investing, back to fair value. We chose a simple instrument, euro dollar, big three, very popular to get started in Forex, where we can start small. We found fair value that seems to be eerily magnetic, and we want to then initiate trades when price moves far away. So far, this all makes sense. We want to buy cars when they're 50% off. We want to buy and sell the euro dollar when it's an ATR away. Okay. Euro dollar back to the missed weekly pivot and an ATR's length away is our system. I just summarized it for you. The euro dollar is traded back, either up or down, to the missed weekly pivot. That sounds fun. What does missed mean? This, from our previous example. We know that price, or at least you're listening to me and maybe buying it, do your own research though, you'll see. Most of the time, price touches. Once it touches, it's typical, right? There's probably not much going on, just another week and day in the market. But if it doesn't touch, if it doesn't even bother to go back to where it's supposed to go, quote unquote, that's when we're interested. We only want to trade if price has gone far away without bothering to come back to fair value. This means I have to buy, I can't, it's supposed to go back to fair value. No, I must buy. Right? That was a little conversation that goes on right here. So it's untouched. If price is touched, then we don't care about a trade anymore that week. As long as it's untouched and run away, we care. Okay? As soon as it's touched, we do not care. If it's touched, we leave it alone. Now, the ATR, the average true range for the euro dollar, is about 80 pips over the past several years. You can look it up to confirm it. So 80 pips, again, it varies a little bit, but it's pretty good indicator over many years. That's probably extreme enough, okay? But we're going to do more. No, that's not all. We're going to get even pickier. We're not going to just let a day's movement go by or go away from the pivot. We're going to use 1.5 times a day's work. 1.5 times the average true range is what we're going to use. We're going to wait for super extreme, not extreme, super extreme. So if the average true range over a bunch of years is 80, that's not good enough for us. Let's do 1.5. That equals 120. 120 pips away without touching the weekly pivot starts the trade, or at least starts us looking for it, right? This, if you did your measure, went 120 pips away. We're interested. You can see there that happened to work out. How nice. Well, great. We're in. Now, what's the target? Well, let's not make it go all the way back, right? Things can happen on the way back to fair value. It doesn't always go back. Well, almost always goes back. And in some cases, like the SPY or the Dow Jones, it does always come back in a long trade, right? But anyway, it doesn't have to go all the way back specifically when we want it to. It might come back weeks, months later, blah, blah, blah. But let's up our percentage and say, listen, we know the principles work. We're just not going to make it go all the way. Let's just make it go 1 day's worth of work back. I don't think I said that very well. It means 1 ATR back, okay? If it's moved a full day, we don't need it to go 120. We'll take 80. That's enough, right? It's 1 day's work. Okay, we need a stop loss, then we have our target. Well, we're getting in at an extreme situation. We're getting in when prices moved 120 pips without touching the weekly pivot. We're in an emotional time right now. We can't use a tight stop. The trend is up. You know, it may not turn on a dime just because we want it to. So let's give it room. So we're going to use 1.5 times the ATR again. If it runs more than a day and then runs more than a day again, well, then clearly our idea is not working. But we're going to give it plenty of room. Anything else to consider, says the slide? What about break even? For our psyche, for our spirits, maybe we should have a break even, right? We're all scared. We're all getting nervous. It would be tough to see it run 70 of our 80 pips and then turn around and lose. Wow. That would be rough, right? So let's say, okay, listen, you've almost gotten there. I'm not going to let this turn into a loser, okay? So that's when we're going to use break even. We're going to let it get almost there and then say, listen, we're definitely not taking a loss on this, okay? So I did 7/8 of the way there. Is that 7/8? Anyway, 70 pips. At 70 pips, that's enough for me. You can make it 50, 40, 20. Right? 20 is not great, but do your own testing. For this system, though, I'm like, it almost got there. It's probably just going to keep going, but if it doesn't, I'm only taking 0. I'm not taking a 120 pip loss on this. So for this system and our future psyche, that's what we'll do. I don't know if it's going to make it more profitable. In some cases it does, some cases it doesn't. We're doing it for our brains. Last thing to consider, what about days of the week? Again, to think this, it's principles, not data mining. Monday, Tuesday, let's just try it. No, let's think it. Let's think it through. This trade is very potent at the very start of the week. Price closes on Friday in the FX market. People have news, weekend plans, sadness, happiness, and they come in on Sunday night, and it's like, oh, I got to get out of that trade, or I got to do something else, or news has come out. Price will move back to the pivot right away an extraordinary amount of time. It pops right back, or it goes crazy the wrong way, quote unquote, wrong way. A lot of stuff happens after a weekend of thought. So this particular trade, if it's going to go back to fair value, it's probably going to happen right away. So new weekly pivot comes out. You've done our calculations. Price tends to run to it right off an emotional weekend. Now, after Monday, right, it does what it does and news is digested and nothing else comes out. What are we left with? Well, on Tuesday, it's like, well, we've knee-jerked reaction, right? So now what? Now it's probably going to, well, I don't think it should have come back. Let's go back the other way, right? There's going to be some sort of reaction to the weekend reaction, and it's going to happen on Tuesday. Monday's probably going to be emotional, and guess what that means? Tuesday, there's going to be a reaction to that. That's the thought behind it. By Wednesday, it's like, okay, whatever's happened, happened. We're in our trades now. Let's go. That's the thinking behind it. So we're going to ignore Tuesdays. We're going to take the emotional reaction and deal with that and not worry about anything that happens on Tuesday, Eastern time from midnight to midnight. Don't care. Okay? Trade Tuesdays if you want. It's not that big a deal. But because Monday's emotional, Tuesday's a knee-jerk to the knee-jerk, I'm just going to take it out. I just didn't want to trade that day. Put it back in if you want to. I'm just telling you. I didn't do it because of numbers. I did it because of thought pattern. Now, do the numbers bear it out? Well, we'll see. But that's the idea. Okay, so here we are. Settings. We'll enter a trade when it moves 120 pips away, 1.5 the ATR, 120 pips away from a missed pivot. If it touches, bets are off. If we get in, we're going to target 80 pips, and our stop loss is 120 pips, right? Using the ATR as our guide. We're going to move to break even at 70 pips, save our brains, and we're not going to trade on Tuesdays to avoid the overcorrections to the correction. Okay. Are you fine with that? Does it make sense? How do we do? Well, this is the weekly pivot Euro-dollar robot from 2008 to April 2021, trading one lot each time, okay? On a hypothetical $15,000 account, okay? 51,000 profit factor looks good. Drawdown, only 37%. What's a typical drawdown for the market? 50 to 75 or 80%. So if we're under 50%, we're way better than the market. Way better. Way better. We saw 37% in 2020 during the pandemic, right? That was mild for the S&P, right? Everyone talked about V-shaped recovery. 37% was nothing. Well, that's the worst this one's ever done. And to a mild correction, like people are like, I'm used to so much more in the stock market. Anyway, the absolute drawdown is the key here. That's the amount it goes below our original amount. And it only went $3,200 below our original amount before it made money above our original hypothetical investment. 349 trades. Ooh, profit is pretty good, right? Winning trades, losing trades. As you can see, doesn't break even very much. I mean, it's not really necessary to have it there, but we have it there. Wow. Okay. Our idea looks pretty good. 51. Those are the numbers again, right? Not bad. Well, we talked about it at the front. I'm furious at passive investing. I'm furious that experts tell us we have to do it. So build a system that beats the market. Okay, great. Does it beat the market? Well, here's a little handy calculator. And $10,000 in January 2008 would have turned into roughly $29,000 in March 2021. That's a total return of 178%. People say, you got to add the dividends. I'm like, well, people spend dividends. And we get into a fist fight. I don't care which one you use, right? Use either one that you think is accurate. It either made 8% a year on average or 10% per year. Whatever you want, okay? I think dividend investing is whatever. Dividend investing is fine, but I think including dividends is a little inaccurate. But anyway, according to real life. But anyway, okay? So there you go. Well, wait a second. Well, $10,000 turned into 29. Wait, what did we just say? Our little system made $51,000 of profit. This only made $19,000 of profit. Our simple little trading system is doing way better. If you divide 51,000 by an aggressive, now this would be aggressive, very aggressive, but just to keep apples to apples, 51,000 divided by 10,000, right? You can do the math. It's over 500%. Feel free to correct me if I'm wrong, right? You love to correct people when they're wrong. This is with no compounding. This is the same trading system, the same trading size since 2008. Never, even though we're making 51,000 of hypothetical money, we didn't raise our trade size. Okay, we'll get to that in a second. There's no way, I mean, it has less drawdown. Remember, in 2008, it was over 50% drawdown, so we had 37%. Probably our drawdown, if we use $10,000, I take that back. $10,000, our drawdowns were comparable. Fine. But we made so much more money, right, for the same amount of drawdown. No matter how you look at it, this beats the account. This simple little thing that we made from scratch just absolutely destroys, right? It just destroys the market. Now, what if I'm scared? I don't want to trade just one thing. Well, we can do just one more. Let's use one of the big three. Just one more. The dollar-yen. Almost entirely the same system. There's only one difference, okay? We had an 80 pip target, which is the same, but we had a 100 pip stop loss instead of 120. So if we added, again, it's not about building a portfolio because we can go down a rabbit hole, Okay, I'm just showing you if you added one more tiny thing of the big three. I'm not advocating it, I'm just telling you. So the dollar yen has slightly different parameters, but was built exactly the same way. Little different stop loss, blah, blah, blah. Okay? If you want to know more about that, fine. It's for education, and here's what we've been educated to see. This now, instead of 51, we go up to 70, right? It was 51. Now it's 70. So just by adding, didn't add a lot, but it added some, right? Absolute drawdown, about the same, a little bit more. Drawdown was still, right? It added a little bit of cushion. Didn't make it tons better, though. But it added a little bit cushion and gave us more money, okay? Trade profit was still good. We got some more break-evens by adding the dollar yen, okay? This is just if you're scared to trade one thing. Now, here are the yearly results, right? Guess what? Passive investing has losing years. Always has, always will. If we're going to trade and beat the market, we're going to have to deal with losing years. Nobody can do it. I'm just telling you, you have to do it. If you don't want to do it, then fine, right? If you don't accept a losing year. I get it. But I'm just telling you, the number one investment advice on earth has losing years, and many of them. Okay, adding these two together, we have a losing year in 2009, but a massive winning year in 2008. Even better in 2010 and 11. Great year in 15, losing year in 14. Is losing so far in 2021, but had a great 2020. Okay, and that's trading both of them together. Now, we've already beaten the market. I mean, we've beaten the market like a drum. We didn't compound, right? How do you compound an index fund? Right? Well, you're not trading, so you can't compound, right? This means that you make a trade and your account goes up or down. If the account goes up, then we bet more. If the account goes down, you bet less. I have software that does this for me. I like to do this for fun. Remember, these are hypothetical numbers. Please don't go cuckoo. Starting with a hypothetical $15,000 account, if you took that portfolio of two, you ended up with $631,000. I know, it's crazy. You'd have to survive so much, right? You'd have to psychologically be so strong. But I'm just showing you possibilities, hypothetical possibilities. Does that beat the market, by the way? Does that beat the $29,000 or $10,000 turned into? Granted, this is $15,000, but still, is $630,000 better than $19,000 of profit? Right? It's crazy. And yet people say you can't do trading. You have to. I mean, it's just crazy what they tell us. I mean, this is just, if you compounded, look at this, right? Look at what happened in 2018-19. I mean, that's $176,000 hypothetical. It was over 2020. Our little account would have had a $170,000 year. I mean, it's just crazy, right? All hypothetical, just showing you losing years are a route and you'd be down in 2021 and that'd be awful, but you would have made all this by the time this happened. Okay? Just wanted to show you that. Just trying to open your mind. Okay, let's wrap it up. We've been talking for a while. We started from scratch and we built something on timeless principles. We had an idea first. We didn't really optimize here, right? We just had ideas. I didn't go through and show you the best inputs. I just showed you 1.5 ATR this, 1 ATR that. We chose the euro dollar because it's the most famous and it's got a ton of volume. The portfolio is way better. Well, I guess that's kind of, it's better. I wouldn't say way better, all right? I'll have to fire the slide maker that works for me, which is me, of course. Portfolio is better, right? And when it's compounded, it gets ridiculous. But the bottom line of the bottom line screen is that trading systems, if made sensibly, are better than just buying and holding the market. Way better. No compounding, just the euro dollar. Look at the hypothetical numbers. I mean, it was way better. Way better. Now, okay, great, you think this is wonderful and you want the automated strategy, you can trade this manually. Just put your orders in ahead of time. I've done it manually. But if you don't want to do it manually, normally I offer this robot as a part of my membership, and it's expensive, okay? My membership is expensive. If you've made it to this part of the video, it's only $149. I don't sell this one individually, and I might take this video down. I don't know what's going to happen in the future, but I would like people, I told you my point is to not have problems, have solutions. I would love for people to have a way to do better than the market and not follow stupid expert advice. Okay, sorry, I said the word stupid again. Didn't mean it. Now, if you want that discount and you're interested in this robot, you do have to email me and introduce yourself. I don't like nameless, faceless people on the internet. I like trying to at least know that you're a human being with good trading goals, right? I'm interested. So email me, introduce yourself, tell me why you're interested, and we'll maybe offer you a little bit of a discount there, huh? $149, right? All right. Normally, the weekly pivot robot comes as a part of my membership. That's $3,000. And today on YouTube, well, I mean, this video is going to be up a while, I think. So if you've made it this far, you do get a discount as long as you email me and let me know. All right, that's the end of our educational video. I hope it's helpful. I'll be back next month with another long form video, and I'll talk to you then.